Hi, I'm Wallace. I'm the founder and CEO of Above Board Financial. And in this video, I'm going to answer the question, what happens at the end of my term for term life insurance? This is a common question that we get. And if you're watching this video, it's probably because you're part of one of two groups. The first is that you are a client already and you've received a policy that you applied for and you're reviewing it, and you have some questions. And the second group is that you are choosing a term, you haven't decided what to apply for yet, and you have some detailed questions about what happens at the end of your term. So the main thing here that I want you to keep in mind is that if you're buying, say, like a 20-year term policy or a 30-year term policy, you're doing that with the plan that you're not going to want this coverage for longer than that period of time, right? The base case is that maybe you will have retired by then, or you're going to be at least ready to self-insure. And so you're not going to want this income protection coverage anymore, right? That you're going to be happy to not have this coverage sometime within that time frame. However, oftentimes folks very sensibly ask, like, well, what happens if it turns out to not to be the case, right? So if you are still in your term life insurance policy, when it gets to the end of the level term period, one of two things will happen. And the first one is by far the most common. And that is that your premiums will go up a lot, like a shocking amount. And I'll show you an example from a real policy in just a minute here. The second and less common option is that your coverage will go down a lot. And I'll show you an example of that too. Now, let's take a look at that first example. This is from a real policy that was issued pretty recently. And you'll see that the contract date or the start date is January 18th, 2025. The level premium end date is January 18th, 2055. So that tells you that it's a 30-year term policy for $1.5 million. You can see over here. Now, the premiums for during those 30 years are $2,485, right? So keep that number in mind, $2,485 per year. Those premiums are guaranteed. It cannot go up in any circumstance for this entire 30 years. It's locked in. It's totally the client's option. If they want to keep the coverage for all 30 years, they can always choose to drop it early with no penalty. It's like the opposite of a 30-year mortgage in that regard. Or obviously the mortgage, you can't just decide you're done paying, right? With 30-year term, it really means that you have the option, but no obligation to keep this coverage at this price for that long. Now, what happens in year 31? Well, on the next page, you can see, yikes, the premiums go from $2,485 up to $15,130. And then you can see that it just keeps rocketing up ridiculous amounts of money every year thereafter. So this is obviously not something that you would want to plan to sign up for. And if you're wondering what that column on the right is, guaranteed maximum annual premiums, that just means that by the time you actually get to that date in the future, the insurance company legally has a right to raise your premiums as high as the guaranteed max in these future years. Again, not a good situation. And it really highlights the importance of picking a term that is going to cover you for what you think is very likely to be the amount of time that you want this term coverage, right? Because if you don't do that, then you're kind of left with a couple options. One is applying in the future, which even if you remain healthy, the pricing goes up with every year of age. And two, the bigger risk is that something about your health changes and you either become totally uninsurable or the pricing that you can qualify for becomes way worse than it is today. And so the other option is converting, which, depending on what type of term policy you have, may or may not be available by the time you get to the end of your term. If you want to learn more about the conversion option, which I highly recommend, definitely check out our video about conversion option too. Now, let's take a look at the second type of thing that can happen. Some policies, not most, but some, cut the death benefit instead. And this is an example of a $5.5 million 20-year term policy. So if you take a look at what happens between years 20 and 21, you'll see that while the premium stays the same, the death benefit gets cut big time. It goes from that $5.5 million down to just over $494,000. So that basically shows you what happens if you wait until the end of your term and then still want to renew year to year. It's definitely not a good option. And so we definitely recommend thinking about getting a term that's long enough to meet your needs and or choosing a policy that has a great conversion option. Definitely check out our conversion option videos if that's of interest. Now, always feel free to reach out with any questions and visit us at aboveboardfinancial.com.